Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Buying time. Keir Starmer resists calls to resign as UK Prime Minister after a day which saw gilts and the pound under pressure from more political uncertainty. Asian stocks, meanwhile, hit new record highs as a global rebound in tech gathers pace. Plus, European heavyweights report. We'll bring you updates from Barclays, Astrazeneca, BP and the Gucci maker Kering. Well, a very good morning. Welcome to Tuesday. The picture in markets looks like this. We had US stocks closing near a record high yesterday, a rebound in tech, and that sentiment continuing in Asia, but not set to continue here in Europe. This rally getting an early test. Meanwhile, the yellow metal in the red after 2 days of gains. Of course, we had that historic rout last week, but it seems like traders are trying to find a floor here. Still above the $5,000 an ounce level, but keep an eye as well on the Bloomberg Dollar Spot Index. In a narrow range right now, but we've got a raft of data to bring you. It's in anticipation of that keeping still for the moment. But speaking of that data, let's take you through the risk events on the docket for today. At 1:30 p.m. London time, we've got those US retail sales numbers ahead of the jobs data and the CPI numbers later in the week. And then at the top of the hour, earnings, Astrazeneca reporting and Barclays as well. But just breaking across the terminal, we already have some breaking numbers out of Amsterdam, and that is from Philips. Philips telling us that they see 2026 comparable sales growth in a range of 3% to 4.5%, and also telling us that they propose to reappoint the CEO, Roy Jacobs. We also have numbers from Kering. They have fourth quarter Gucci composite revenue coming in at minus 10%. The estimate was for a drop of 10.4%, so not quite there, but pretty much in line. And fourth quarter revenue coming in at 3.91 billion euros, so that's down 9.1% year on year. Well, plenty more to bring you. Let's set you up for the day ahead. We begin in markets. Let's go to Winnie Xu. She joins me now in Hong Kong. Winnie, it seems stocks in the green where you are.
Yeah, exactly. Morning, Lizzie. We are seeing Asian stocks rising for a third day, and that's helped by that tailwind overnight from the U.S. tech stocks. And here specifically, you can see that TSMC really leading gains, up some 3.6% to a fresh record. It is coming after that FT report saying that the U.S. is considering exempting some chip tariffs for some of these U.S. major tech names. But also, we've just got those monthly data. January sales up 37% year over year. So that's also lifting the overall sentiment when it comes to the tech space. You can see that Samsung, SK Hynix here, both moving higher. Now, you also flip the board and take a look at what's going on in the Japanese market, because we are seeing for the second day that the Takaichi trade is still on. So supporting the benchmarks topics and the Nikkei up some 2% with expectations for her fiscal plan to come through. However, when it comes to the Japanese yen, actually strengthening slightly here, close to 0.4%, and also the 10-year yield moving slightly lower. Those are coming after Takaichi acknowledged the market concerns when it comes to how she's going to fund those tax cut plans when it comes to food. Also flip the board and take a look at what's going on in the Chinese market, because actually Chinese stocks under a bit of pressure, really underperforming the regional stocks as well. And that is because really the tech stocks lagging in China as investors shift their focus into consumer stocks ahead of Lunar New Year. But the highlight really is in the currency space. You are looking at how the onshore and offshore stocks, onshore and offshore currency, both strengthening around that 690 level. And that is coming after that scoop we had yesterday that China is urging banks to cut their U.S. Treasury holdings. Back to you, Lizzie.
Winnie, thank you. So we've got enthusiasm when it comes to Asian equities this morning, but will it continue into the US and European sessions? Let's go to Bloomberg Markets Live cross-asset strategist Mark Cranfield. Mark, I'm looking at Nasdaq futures ever so slightly in the red now. European stocks 50 futures also flat to the downside. What are we looking out for today? It looks like AI-related corporate bonds are in demand, but where are the risks for equities?
Well, the problem with this is we've seen good demand. Alphabet, very much oversubscribed, sold plenty of bonds. Oracle, just a few days ago, similar situation. A lot of demand, people trying to grab some yield while they can. There's obviously a possibility the Federal Reserve will lower interest rates again. So you want to get in ahead of that and get in these extra basis points as quickly as you can. And the market's in a fairly stable situation as well. The problem here is that once you start issuing corporate bonds in this kind of space, you then introduce the element of the credit default risk. And that's a much smaller and more volatile market. And we saw this back in December, when some investors were getting a little bit anxious about Oracle's spending plans on data centers, thinking it was a bit too high. They took it out on the credit derivative market. Now, it doesn't need nearly as much money to push around the credit default market. Once you do that, it starts to fill back into the equity market. You can bring down the stock prices fairly quickly if the tail, which is the CDS market, is moving it around. So this is the problem. You go into the corporate bond market thinking that everything is relatively smooth sailing, but you're opening up a new window of risk. This is where all of the big tech companies, it looks fine now, but at any moment you make a misstep and the credit market will start to say, hey, we see a problem here. We want to get higher compensation for the risk we're taking, and that will feed back into the equity market. It doesn't necessarily mean it's going to happen right now, but once those bonds are out there, you just can't bring them back straight away. They're subject to all the risks that go with the bond market in general, whether it's treasuries, all the data that you're talking about, that's all out there as well. But also, you've got the hedge funds are very active in the credit space where they see a good name, they size it up against a bad name, and then you get these spread plays, these basis risks, and they're all churns within the default market. And there you have a feedback loop into equities. This is the risk that people like Alphabet and Oracle are opening themselves up to.
Now, Mark, we're going to dive into the UK politics in just a moment, but just walk us through the market moves that we saw yesterday. Bonds and the pound under pressure, seemingly reversing a bit later in the day. Where's the pound most vulnerable if Keir Starmer, the UK Prime Minister's position, gets weaker?
Certainly the gilt market is somewhere where we've seen it before. If you get a disruption in the long end of the market, especially in the yield curve steepening, that can feed back into the currency. But traders will also be looking at the cross rates, probably more so than the US dollar. The direction of the pound against the US dollar is probably going to be determined by broader factors. For the time being, it seems as though investors are relatively comfortable with the idea that the US dollar will gradually decline because of what's happening in the United States side. But then if you look at where the pound is in relation to the euro and the Swiss franc in particular, that's where aggressive traders will probably take it out on the pound. They'll be thinking that when you compare us to the most secure currencies in the European space, and probably even against the Japanese yen, the pound is looking like a bit of a weak link. So that's much harder to defend. So you're going to have these expert traders in the currency field. They'll be looking for where the edge is in looking through the option space, particularly in things what we call the risk reversals, which is the long-term direction of the option market. And that's where they'll be saying, okay, against the euro, against the Swiss franc, the pound hasn't got a great outlook, particularly over the next few months. And that is where we could see some pound weakness come in, even if the situation for the pound looks relatively calm against the US dollar. So watch out on those crosses. And we're seeing a bit of yen strength as well this week. And the pound yen rate has been going pretty much upwards for a few months. That could easily correct as well. Positioning is quite big in that space as well.
And that dovish vote split at the Bank of England doing no favours to the pound against the euro. Mark, thank you so much. That was Bloomberg Markets Live cross-asset strategist Mark Cranfield. Well, let's get into the politics then. The UK Prime Minister Keir Starmer has shored up his position after securing public support from his cabinet and delivering a defiant speech to his MPs. Starmer's position remains fragile, though, following a storm over his appointment of Peter Mandelson as US ambassador and the latter's links with Jeffrey Epstein. For more, let's talk to Bloomberg opinion columnist Rosa Prince. So, Rosa, what a day it was yesterday. 2 aides had quit. The Labour leader then in Scotland told Starmer to quit. And then it seems like the cabinet bottled it, Rosa. So how safe is the PM today?
Yeah, there was a wobbly moment there where I did think he might go, and then the cabinet swung behind him, and he gave a pretty barnstorming speech to the Parliamentary Labour Party. That's the group of Labour MPs who sit in Parliament, and they seem to have decided, you know what, we're going to step back from the brink. And I think a couple of things happened. I think that a lot of cabinet ministers decided that this wasn't quite the moment. You know, there are some very difficult times coming down the track, and I think they kind of thought, well, you know what, why don't we leave Keir Starmer in situ to deal with all that? And none of the contenders to replace him are in a very strong position themselves. So I think, again, they wanted to get their personal campaigns going. So I think he bought himself a little bit of time yesterday, but I certainly don't think he's out of the woods, and I still think it's probably unlikely that he will be the person in charge by the time of the next election, which, if you remember, doesn't need to happen for another 3.5 years.
And indeed, polymarket odds would agree with you, Rosa. But I wonder why they didn't think it was the moment. Was it because none of the other candidates that could replace Starmer feel ready? Or is it because they were taking note of the volatility in markets caused by all this political uncertainty, as Mark was just laying out?
Yeah, I think a bit of both. The problem for anyone who wants to get rid of Keir Starmer at the moment is there really is no credible candidate to replace him. I mean, some of the names we talk about, Angela Rayner, the former Deputy Prime Minister, she is still engulfed in a scandal involving her tax affairs. There's an investigation into that which isn't complete. The Health Secretary, Wes Streeting, he's on the right of the party. He also was closely associated with Peter Mandelson. He actually issued his messages with Peter Mandelson yesterday to kind of prove that he'd done nothing wrong. But he's not universally liked yet in the party, unclear whether he could win a contest at this stage, and so on and so forth. Andy Burnham, the popular mayor of Manchester, remains just that. He's not an MP, and so therefore he can't actually run to be Prime Minister. So I think what all the people who actually would quite like to be Prime Minister will do now is to spend the next couple of months getting themselves in a better position and try again.
All right, Rosa, thank you so much. That's Bloomberg opinion columnist Rosa Prince. We're going to keep talking about the UK throughout this programme, but first we're going to be talking to Canada's International Trade Minister about the country's efforts to boost exports to Asia. And we're going to be speaking to Robert Hayward, pollster and member of the UK House of Lords, as Keir Starmer faces down calls to resign. That conversation next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's just coming up to 6:15 a.m. here in London. And let's get more on the UK politics now. Prime Minister Keir Starmer has come under intense criticism over his appointment of Peter Mandelson as ambassador to Washington, but has managed to face down calls to resign. However, polling suggests a majority of the public now believe he should lose his job. I'm pleased to be joined now by the pollster Robert Hayward, who is also a member of the UK House of Lords. Lord Hayward, thank you for making time for us. If you don't mind me saying, you've seen many prime ministers come and go, so I wonder what's been the mood in Westminster?
The mood is febrile, which is a word you only ever hear when people are plotting to bring down a prime minister. There's no question that there was an expectation that Keir Starmer could well go yesterday after Tim Allen and then Anna Sarwar. But as Rosa was saying just now, I think there's more episodes of this to go than West Wing. So we've got a long way to watch.
Well, you've accurately predicted previous comings and goings of prime ministers. How long can Keir Starmer last?
I think it's the real crunch point comes after the local elections. We've got the by-election in Gorton and Denton coming up in a fortnight's time. Then there's all the run through to the local elections on May the 7th. And remembering that they're not just local elections in England, but the Scottish Parliament and the Welsh Senedd. And those are constitutionally important as well as politically important. And then I think the Labour Party internal wranglings will come to a head sometime in the summer.
So let's break this down. In terms of that by-election in Gorton and Denton, who wins if it can't be Andy Burnham now?
Well, there's no question that it's probably the Greens to lose. Your party, the Jeremy Corbyn's party, and the Workers' Party have both withdrawn in favour of the Greens. They are the favourites in the betting markets, with Reform behind in second place in betting and Labour a long way back. So certainly it looks as if the Greens are favoured by those who are putting money on it.
Interesting, so not Reform. And then how will the loss of the Scottish Labour leader's support for Starmer hurt Starmer north of the border?
I think it hurts Starmer. The Labour Party were hoping to replace the SNP. The SNP have been in a lot of mess for the last few years. And you feel it very strongly if you're in Edinburgh that actually people ultimately go to vote in, although they're Scottish parliamentary elections and Welsh Senate elections, people are really passing comment on what's going on in Westminster, which is why Anas Sarwar made the comments he did yesterday, because he is desperately trying to break the link between Edinburgh and Westminster in terms of voting habits.
And what sort of result at the May elections would make Keir Starmer's position untenable?
Very severe losses all over the place to a lot of parties, and I think that's what's likely to happen. Not only are we going to see, certainly at the moment it looks like serious losses in Wales and in Scotland, but there are elections in all the London boroughs, in most of the major English cities and some of the counties, and it's likely that the gains will come from the gains will go to Reform, to Greens, to the Liberal Democrats, and the ultimate insult would be if the Conservatives can retake any of the London boroughs which they lost 4 years ago, for example, Westminster or Wandsworth.
I was talking about this with Richard Tice, the Deputy Reform Leader, yesterday. When it comes to candidates to potentially replace Keir Starmer, who's the most likely in your view, and could any of them fend off that threat from Reform?
The difficulty for the Labour Party, as Rosa was identifying just before the break, was that a number of the candidates are just not ready. Angela Rayner, enormously popular, but she has this tax issue, and until that's resolved, she would not be attractive to the public. It might be attractive within the Labour Party, but if you're going to ditch a leader, you've got to find somebody who is sellable to the public at large, and that's Angela Rayner's problem.
What about sellable to the markets? Do you think all this talk of not wanting to be in hoc to the bond market is just all talk, really? And if they ever came close to government or even close to the election, the fiscal realities would take over?
I think they would. There's no question that the events, I hear it regularly on Bloomberg, a Liz Truss moment, and there's no question that is built into British politics now, and therefore politicians can say what they like and what they hear from their constituents, but they are looking over their shoulders at the impact of any decision that they take on the stock markets, the bond markets and the like.
Great to get your take. That was Robert Hayward, member of the UK House of Lords. Thank you for joining us this morning. Well, coming up, the Gucci owner Kering is struggling to revive its biggest brand, sales falling there. We'll bring you more on those earnings next. This is Bloomberg. Well, it's a busy day for earnings. Gucci sales falling in the final months of the last year as Kering struggled to revive its biggest brand. For more on those numbers and today's other earnings, let's bring in Bloomberg's Chloe Melly. Chloe, we were kind of expecting this from Gucci Kering. Is this that disappointing?
Yes, it was a sales drop. It was a sales drop that was in line. So I think this is not going to be seen as a really major weakness for Gucci and for Kering, but it might indicate that it actually will take a little bit longer for Luca De Meo, the new CEO, to really revive the fortunes at Gucci. And this is really going to be, with the next catalyst is going to be that debut collection from Demna that we're going to see very soon. But then in terms of what that means for the broader luxury sector, this might be seen as a little bit of a setback. We started the earnings season with a lot of enthusiasm and confidence in that luxury rebound with Richemont and Burberry. And then LVMH kind of was seen as a bit of a setback there. And then we might see those Kering numbers as maybe an indication that it will take a little bit longer to get that luxury rebound more broadly as well.
So you've got all these new designers, but it's still taking a while to make a difference. In less glamorous earnings, let's turn to Barclays. They're reporting as well. What are you looking out for there?
The main thing, so the fourth quarter earnings are expected to be quite resilient, and especially the trading revenue, we should see that essentially following in the footsteps of what we've seen from Wall Street banks and then from companies like Deutsche Bank here in Europe with those strong investment banking division, which is that trading revenue is really benefiting from the market volatility that we've seen over the last few months. So that should be a boost for Barclays. And then the big focus is also going to be on the targets, so 2028 targets, in particular any kind of update on capital returns plans from Barclays. That's going to be a big focus. Any news on buybacks, any news on return on tangible equity target, that is going to be really the focus. So that trading revenue and then also those targets going forward.
OK, well, shares up, as you can see, 60% over the past year. Then we turn to BP and Astrazeneca, I should say, on the docket later on. What are we watching out for from them?
Well, for BP, we have the problem of lower oil prices. So that's something that affected Shell earlier this earnings season. So that is going to be relevant for BP as well. But then, of course, BP is also undergoing this big turnaround, this refocus on oil and gas, just as oil prices are falling. And the pace of share buybacks is going to be really important as well. Analysts are expecting that BP might actually cut back on those buybacks, just as, you know, it's undergoing that turnaround. So, of course, that might trigger quite a negative market reaction. And then for AstraZeneca, the big theme for pharma this quarter has been really around generics competition. That was a big part of the story from Novartis last week. And so this is going to be also relevant for Astra, especially when it comes to its diabetes drug, Farxiga. So we'll be watching out for that. But the rest of the earnings from Astra should be quite resilient. That's what we're expecting.
OK, Chloe, thank you so much for taking us through those earnings on the docket for the day. Well, now to some other top stories that we're following for you this morning. The Bank of France Governor François Villeroy de Gallo has announced that he'll step down in June, well before his term's due to end in October 2027. Why? Well, Villeroy says that the decision is personal and it clears the way for President Emmanuel Macron to appoint his successor rather than leaving the choice to a future administration. Elsewhere, a White House official says the exact date in April for President Trump to meet with Chinese leader Xi Jinping has not yet been finalised. That's after Politico reported that Trump would head to Beijing to meet Xi in the first week of April. The report says the two leaders could potentially meet 4 times this year as their trade truce holds up. And China has signalled greater efforts to protect national security in Hong Kong after the sentencing of Jimmy Lai renewed foreign government's call for the former media mogul's release. This comes after the US Secretary of State Marco Rubio criticised the 20-year prison sentence for Lai, describing the court decision as unjust and tragic. And the European Union is preparing options to embed Ukraine's membership in a future peace deal. That includes providing Kyiv with protection and access to membership rights. The bloc would give Ukraine a clear timeframe of steps to advance with the formal procedure. Other options include continuing along existing accession path or introducing a transition period. Well, coming up, we'll be diving into the markets and what's driving volatility with BNP Paribas Markets 360's Head of Developed Markets, Rate Strategy and Economics for Europe. That conversation coming up next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Buying time. Keir Starmer resists calls to resign as UK Prime Minister after a day which saw gilt and the pound under pressure from more political uncertainty. Asian stocks, meanwhile, hit new record highs as a global rebound in tech gathers pace. Plus, European heavyweights report. Kering continuing to lose its shine as Gucci sales tumble 10%. We're going to be bringing you updates from Barclays, Astrazeneca and BP. But first, let's check in on these markets. Welcome to the programme if you're just joining us. It's 6:30 a.m. London time, and we have futures pointing lower here in Europe. We did see the S&P yesterday closing near a record high. Tech getting a rebound, but that rally facing an early test this morning. Asian stocks, though, continuing with yesterday's sentiment. They're still in the green. But take a look at gold, the yellow metal in the red after 2 days of gains. We had that historic rout last week, and it seems that traders are trying to find a floor here. So still above the $5,000 an ounce level, but very much in the red. Now take a look at the Bloomberg Dollar Spot Index as well. We've got a raft of data to bring you this week. Retail sales on the docket at 1:30 p.m. London time. And as we're waiting for all of that, the Bloomberg Dollar Spot Index very much range-bound. Now, on the front pages this morning, the Financial Times leads with UK politics. They've got UK Prime Minister Keir Starmer and his impassioned speech to his own MPs yesterday, insisting that he is not prepared to walk away from Downing Street. Though none of those MPs openly called for him to quit, our team reporting that Starmer's reprieve is only likely to be temporary and that fight to stay in power is going to continue on today. Turning over to France, we have Les Echos and the Bank of France Governor François Villeroy de Gallo unexpectedly quitting in an early move that leaves the choice of his successor to Emmanuel Macron instead of a possible future president from the far right. So this headline translating to the Bank of France was the finest mission of my life. Now, let's also turn over to the Wall Street Journal. They've got the Trump administration planning this week to repeal the Obama-era scientific finding that serves as the legal basis for federal greenhouse gas regulation. So this really would be the most far-reaching rollback of US climate policy to date. So very different front pages this morning, but you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which, as ever, terminal subscribers can find by going to DAYB Go. Well, despite the temporary reprieve, as I say, UK Prime Minister Keir Starmer's position remains precarious today. Lawmakers on the left of the Labour Party warning that keeping Starmer in place could harm the party's chances at the local elections in May. Well, let's go back to our Bloomberg opinion columnist Rosa Prince for more now. Rosa, just walk us through how Starmer managed to make it through yesterday. There were times when he was really on the brink.
He really was. I think around mid-afternoon, there was a moment there when the Scottish Labour leader, Anna Sarwar, openly called for him to go in a short speech that there was a problem. And then just a few minutes later, members of the cabinet began tweeting their support for him. One by one, they all came out and backed him. I think if any one of them had echoed Anna Sarwar, it could have been fatal for the PM. But there they were. Also, Angela Rayner, who is seen as a contender to replace him, the former Deputy Prime Minister, she also tweeted her backing for him, and that was a big moment that shored him up. And then come the evening, he met his own MPs, the PLP, the Parliamentary Labour Party, and he gave what is described as really quite a rousing and passionate speech where he said he's not going to walk away and where he promised to do better, apologised to the victims of Jeffrey Epstein for backing Epstein's friend Peter Mandelson to become US ambassador, and said, look, let's go forward and turn this around. So by the end of the day, he was in a lot stronger position. But as you said, Lizzie, I think he's probably bought himself a little bit of time. But in the long term, I don't think his future is all that rosy.
So, Rosa, I was speaking to Lord Hayward earlier. He was saying that it's really the local elections in May to focus on. But between now and then, what's the next big challenge for Starmer?
Yeah, I think he's got two big problems coming down the track. One is that Parliament, against his wishes, voted for the release of all messages between Peter Mandelson and various members of the government with officials. So there could be some nasty surprises in there if some inappropriate things were said, or if it proves that the vetting wasn't carried out very comprehensively into Mandelson's background. And then there is a really tricky by-election coming in a couple of weeks now in a Manchester seat. That would be a contest that Labour should easily win. But given how unpopular the government is, it could be won, in fact, by either of the populists, Reform on the far right or the Green Party from the left. And either of those outcomes would be extremely damaging to Labour and I think to Keir Starmer himself, because, as you say, those MPs are going to start looking at him and thinking, is this a winner? Should we stick with him, or would we be better off ditching him and get someone who's more appealing to the voters?
OK. Gorton and Denton know it well. Rosa, thank you so much. That's Bloomberg opinion columnist Rosa Prince. Well, let's dive straight into the market reaction now. We have Camille de Courcelles, Head of Developed Markets, Rate Strategy and Economics for Europe at BNP Paribas Markets 360. Good to see you, Camille. Thank you for coming into the studio. Investors were really rattled yesterday around this crisis in Downing Street. Do you think that market volatility is going to continue to plague Starmer, even if it receded a bit later on in the day?
Yeah, so I think last night's development were certainly encouraging, so volatility could dissipate a little bit today and perhaps in the coming days as the risk of a leadership contest or the risk of a resignation seems to have dissipated for now. But that risk will linger all the way into the May local election. So I think what's quite notable, in fact, is if you look at the options market showed that options have been sold all the way into the election, and it's only after the elections that people buy options. So, and I would say we certainly agree with that. We think that the peak risk is right after the local election.
And so which of the candidates is the most market friendly? If we're focusing on after the May election and assuming perhaps that Starmer is replaced, are they all in the same boat when it comes to the markets?
Well, it's certainly the key questions for the market. Who will be the next PM? And perhaps more importantly, who will be the new Chancellor? But at the end of the day, what will be key is what will be their fiscal stance. And that is what has been, I mean, this uncertainty, this unknown path forward has been driving this weakness in UK asset for several weeks now. But I think if you look at rates, for example, if you look at our projections, which are probably very similar for many investors, so we project a 25% decline in bond supply on the back of the fiscal picture, which in turn should drive a contraction in term premium of 70 basis points through the year. So now if you change the fiscal stance and let's say you no longer have a decline in bond supply on the back of it, then you can forgo this 70 basis point decline in rates. So I think that's where the market is very much focused on the fiscal picture, but we won't have clarity until after May.
Of course, we were talking about the pound-euro moves. That's also partly because of the monetary policy. I wonder, when you look at that dovish vote split that we saw from the Bank of England last week, does that suggest to you that we're going to get a cut in March? So March has been our best case for a while now. Okay. But certainly last week's meeting was very much supportive of that. The vote split 5 against 4 has been very similar to the sort of vote split that we had at meetings before a rates cut that we had last year. So it's very much similar with that. The inflation picture has turned very rapidly towards the support of a return to target, as shown by the new projections, which show that we would actually return to target as soon as Q2. So this is very much supportive of a cut at the next meeting. And certainly that should somehow erode a bit of potential pain for rates. And unlike for the currency, because the currency in any case will be weaker as the Bank of England cuts and can be weaker if we have fiscal jitters. We also get a load of US economic data this week, delayed as it is because of the government shutdown. Will any of it move the needle for the Fed? So I think we really need to see, at the end of the day, what will be the unemployment rate with NFP. I think NFP will still remain the most important focus for the Fed. Now, we entered last week expecting a pretty decent labour report with a headline print at 105, so above consensus. And there is clearly some residual seasonality, as we have seen almost each year since COVID. So
that would rather suggest the risk is to the upside, even on a strong print that we expect. But the data last week has been a lot softer, the jolts in particular and the openings rate in particular, which is back down to the lows of post-COVID. And then there was Ousted yesterday, caution over the risk of slightly smaller job numbers. Now, it was in conjunction with strong GDP and skyrocketing productivity, but still. And he also added, that we should avoid any panic because the break-even rate is very low. But all this, I would say, these nuances that he shared yesterday, I think actually suggest that there is a risk of an important miss. So we now are looking at an NFP print which might be a lot more uncertain than what we were expecting. But again, I think even if we were to have a miss on the print, if the unemployment rate is steady at 4.4 as we still expect, then for the Fed it might not be such of a game changer. And we would still have a status quo for the Fed for the next several quarters.
OK, well, we'll keep that in mind when those numbers come out. Camille, great to see you. Camille de Courcelles, Head of Developed Markets Rate Strategy and European Economics at BNP Paribas Markets 360. Thank you. Well, coming up, we're going to be speaking to Maninder Sidhu, who is Canada's International Trade Minister, about the country's efforts to boost trade with Asia. So don't go anywhere. That conversation coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. As President Trump threatens Canada's economy and sovereignty with tariffs, Prime Minister Mark Carney says he wants to double non-US exports over the next decade. Canada's Carney has been on a mission to improve trade ties with China and India and hopes to finalise a free trade agreement with ASEAN. For more, I'm pleased to welcome the Canadian International Trade Minister, Maninder Sidhu, who is in Singapore for the Canada in Asia conference. Minister, really appreciate you joining us this morning from Singapore. As Canada pivots trade away from the US and towards Asia, just walk us through what that strategy actually looks like in practice.
Absolutely. Look, I'm happy to be here in your studios in Singapore, of course, for the Canada and Asia conference. And it really speaks to, our focus and our goal of doubling non-U.S. exports to the tune of $300 billion. And what does that mean? It means more opportunities for Canada here in the Indo-Pacific, in Asia, but of course it means more opportunities in Europe for Canadian exporters. And so as we lead up to it, there's, if you look at how fast Asia is growing, they need more energy. With the data centers popping up everywhere, they're looking at Canada for that energy, but they're also looking at Canada for food security in terms of agriculture goods, but also critical minerals. As you know, Canada is resource rich in that. And so at a time when you're seeing a lot of ruptures in the global trading system, Canada is seen as a reliable, stable partner. And those are the phone calls that we're getting, is that we want to do more with Canada. And you've heard that from the Prime Minister's speech in Davos when we were there together, was about middle powers coming together and really respecting rules-based trade and pushing forward.
OK, loads to unpack here. You mentioned energy. What have you been hearing on your travels about appetite for Canadian exports like energy specifically?
Yeah, around LNG is what I'm hearing. Currently we've got 5 different projects in various phases of development. It was a milestone moment for Canada with our LNG Canada 1 project in June, our first ever large-scale LNG shipment going to Asia outside of the U.S. And so that speaks to our diversification efforts. How I'm going to get to the $300 billion target is obviously through energies. And so you're seeing that those projects are being built, they're being developed. But we're fast-tracking many of those projects through legislation that we've changed in June. Canada is now building at much faster, much quicker speeds than we've ever done in the past. And so as Asia builds, as they build data centers, as they grow year over year, you speak about India, 6, 7, 8% growth year over year. They need 70% more energy by 2040. Guess what? Canada's well positioned to serve those markets.
And give us a sense, Minister, of how much Singaporean appetite you've seen to invest in Canadian ports, for example. Have you had any meetings around that?
Yeah, absolutely. I mean, when you come back to our strategy and our take on hitting the $300 billion of exports, additional exports, we're going to need to add capacity at our ports. And so we're doing that. We've got a $5 billion trade corridor fund as a federal government, but we're also working with partners. I've met with PSA, we've met with GIC, Temasek. They are all comfortable investing in Canadian ports, in Canadian infrastructure projects, and there's conversations to do even more in Canada. And just in the Gulf region, I was there a few weeks ago. They've committed to doing about $70 billion of investments in Canada, in infrastructure, in mining, in energy projects, and so we're building up capacity and we're welcoming investments from all around the world.
And what's the latest on the Canada-ASEAN FTA that Prime Minister Mark Carney pledged to finalise this year?
Yeah, Philippines is now the chair of the ASEAN, and we're continuing to have conversations with the Philippines to get it through. Of course, there's many partners, as you know, over 10 partners in the ASEAN region that we need to continue to engage with, continue to explore opportunities. But we're having active negotiations. Our negotiators are in Jakarta this week having their round of negotiations, and we'll continue pushing forward. The Philippines has made Canada one of their priorities as the chair, and so we'll continue engaging with that. But this year alone, since you asked about FTAs, free trade agreements, we've got a handful that we're moving forward on with India, Philippines, Thailand, UAE, Saudi Arabia, ASEAN, Mercosur, and so you see there's a lot of work ahead of us, but I think the appetite is there from many of our partners around the world to make sure that trade works. Just in the past 9 months alone, we are moving really fast at record speeds. We typically sign one agreement a year. In 9 months, we've done multiple agreements with the UAE, with Indonesia, with Ecuador, and many others. And so there's an appetite there to do more with Canada. As I said to you before, it's about reliable, rules-based trade, and Canada stands for that.
You're a busy man, Minister. Which of those deals is closest to the finish line?
So we just completed Indonesia, Ecuador, and the UAE. We're starting with India in the coming weeks. Philippines as well. It was something that we signaled when we were in Malaysia not too long ago. But of course, we're going to continue moving forward. Mercosur is another one of those important trading partners. But again, when you're dealing with multiple countries, you need to make sure you match their speed and energy. And we're going to continue to have those conversations to push forward.
And Canada signed this deal with China to cut tariffs and attract Chinese auto investment. Of course, that drew the ire of President Trump. Coming back to my original question, Minister, how is Canada balancing the upcoming USMCA talks with your push to grow non-US exports?
Yeah, when it comes to the U.S., look, they're our number one trading partner, will always be an important trading partner to Canada. And those discussions will continue. There's another minister, Minister LeBlanc, that's in charge of Canada-U.S. relations. My focus is on international trade diversification. And so I was with Prime Minister Carney in China a few weeks ago. It was to make sure that we're exploring opportunities, but also to work through some tariff challenges that we were having in the agriculture sector. And we were happy to come in with an arrangement to give our roughly $7 billion of agriculture products preferential access to the Chinese market. So resolving that was very important, but also unlocking opportunities around electric vehicles. And so we're going to be allowing up to 49,000 vehicles into the Canadian market with the hope of joint venture partnerships, between Chinese and Canadian companies to build those EVs in Canada. We're a large market. Canadians consume or they purchase about 1.5 million vehicles every single year. They're asking for more options, but it's not just with the Chinese. We had the South Koreans there last week. I hosted Hyundai. They're looking at opportunities in Canada. And just earlier today, we had the German Minister of Economy visit Canada to talk about, some type of economic cooperation between Canada and Germany, but also to explore cooperation around automobile manufacturing. And so this is a conversation that's happening with many countries. And why is that? I think it's important to mention is on the mining resources, we are heavy resources in terms of what we have. We're the only country in the Western Hemisphere that have every single element to make an electric battery. And so I think it's important we have those conversations. And this is why automakers are looking towards Canada, and we welcome that.
Minister, we really appreciate having you on the programme this morning. That's the Canadian International Trade Minister, Maninda Sidhu, out of Singapore. Well, now let's take you to some other top corporate stories this morning. Novo Nordisk says it's suing Hims & Hers for making knockoffs of its obesity medicines, even after Hims scrapped plans to sell a copycat version of the Wegovy pill. Novo argues that Hims is breaching the US patent on semaglutide, the active ingredient in Novo's blockbuster obesity treatment. Hims has called the lawsuit a blatant attack. Elsewhere, Standard Chartered CFO Diego De Giorgi has resigned to take up a role with Apollo Global Management. De Giorgi joined in 2023 and was seen as one of the frontrunners to eventually replace longtime CEO Bill Winters. He'll move to Apollo as a partner and head of Europe, the Middle East and Africa. Standard Chartered says Deputy CFO Peter Burrell will replace De Giorgi on an interim basis as the firm seeks for a permanent replacement. Well, those are some of our top corporate stories this morning, but we've got plenty more coming up for you, so stay with us. This is Bloomberg. So, Keir Starmer survives another day, but can the reprieve last long? Our reporters say no. Here are the poly market odds that Keir Starmer is ousted by June, rising, as you can see. He's not been helped by the resignations of two of his aides and the call from the Labour leader in Scotland for his resignation, even if he was backed by his cabinet yesterday. Take a look at how it's all faring in the polls. Flip the board over and we have Reform in the lead. They're the light blue line here. The Tories catching up in the blue here with Labour, so closing the gap here. Not looking good ahead of those May elections, but that is the crunch moment for the Prime Minister. Flip over one more time. You can see how it's all been rattling investors, and really the pound against the euro is the one to watch because of all of the volatility around the dollar. Strip that out and look at this currency pair. You can see the premium to hedge sterling's drop against the euro has been jumping. It came off a little bit yesterday, but some analysts talking about emerging market volatility here. So yes, the moves yesterday paired when it came to gilt yields rising, the pound weakening, but once again, Westminster has a very close eye. The gilt market has a very close eye on Westminster. We also, in terms of the risk events on the docket today, have US retail sales numbers at 1:30 p.m. and in just a few minutes' time, more earnings from Astrazeneca and Barclays. Coming up, we'll be speaking to a slew of execs following those earnings. That'll be on the opening trade. Don't miss it. Anna, Guy and Tom will take you all the way to the European Cash Open. Stay with us. This is Bloomberg.